My name is Andrés Restrepo. I am the president of Mineros, a company based in Colombia, with operations in Colombia and Nicaragua, and with an exploration project, a participation in an exploration project in Chile. Mineros is a company that has been in business for more than 50 years, but has been listed in Toronto only for the past 3 years. So we are like the new old guy in town. We produce 230,000 ounces of gold, roughly, split more or less 50-50. And we're quite unusual because in Colombia what we have is an alluvial mine. And in Nicaragua we have underground operations, but we also buy mineral from artisanal miners. So I'll be happy to tell you a little bit about it and explain the differences of Mineros that start there but end in the fact that we pay a dividend. We have paid a dividend for more than 15 years, and our dividend yield is now around 12%.
Good to have you here. You're right. It's one of these. I loved your description there of what you are. It's 50 years, but only 3 years public. So you know what you're doing, but people don't know who you are.
No, people don't know who we are. Yeah, and it's tough to get the company to be well known in Toronto, and it doesn't help that we're not like the regular company. People people that doesn't like to face differences, and but. For example, our alluvial operation is so profitable, we're not ready to give it up to please people.
Your problem with the sponsor market is you don't need to go and ask the market for a lot of money, and people want to support you when you're going to use them to raise money, and that's a very different game. So you are, we're 230,000 ounces, you said, yeah? Okay. And can you talk about I'm interested in margins, how much money you're making? Obviously, equivalent 12% dividend is fantastic.
Yeah.
But talk about the different types of operations, alluvial and underground, very different.
Yeah. Okay, the alluvial operation, we believe is the last one of this size in this hemisphere. The mine has been in production for over 100 years. During some time it was owned by British people, then American people, and for the past 50 years it's been a Colombian company. We operate this mine, not as you see on TV. We operate it as an open pit. We do exploration. We drill holes every 50 meters, characterize our mine, and we know where our treasures are going to be in the next 10 years. We have a 10-year life of mine, certified NI 43-101, and we have still areas to explore. So it's a very consistent operation, very profitable. Our cash cost is in the region of $1,100.
Right.
And Nicaragua is quite different. Nicaragua we bought and it was producing 56,000 ounces of gold. Now it's producing 130. And by law in Nicaragua, you have to allow artisanal miners to operate in your land package. We saw that as an opportunity, and we're slowly turning them into small-scale miners. It's a process. But for example, now they're organized in co-ops. We have a life and insurance company devised for them specifically. And they sell us their mineral, and we process it in our plant.
Okay, so very different types of operations. If we go back to Colombia first, you got 10-year life of mine, but you've had a 10-year life of mine for a long time.
Yeah. When the Colombian investors bought the company, it had 10 years life of mine.
When was that?
That was 50 years ago.
Right. Okay. So that's what you were saying. It's very predictable in terms of the ore body.
It is very predictable in terms of the ore body, but what has happened as well is that we have incorporated a lot of efficiencies. So now we are able to mine in areas with a lower grade. Our grades are very low, 100 milligrams per cubic meter, which is nothing.
Yeah.
But the only thing we need to do is separate it using water, so we don't have to do any metallurgy or anything.
Right.
So in time, what we have done is incorporated new technologies, more modern dredgers, more efficient, and that allows us to operate in areas that before were not profitable.
Right.
And at the same time, we have moved north, and we have found additional areas in which there is alluvial gold.
Right, and there's obviously a clear imperative, certainly in today's environment, for the remediation of the land behind you, as it were, as you move forward. So tell me about the kind of I guess restrictions placed on you, or any other kind of oversight that you have on that?
Okay. First of all, we operate separated from the river.
Yeah.
We build an artificial pond that gets filled with water because of phreatic level and rain. Then we have dredges that remove the organic part, and then dredges that remove the barren part, and we set them aside. We extract the gold from the alluvial bed, and then all the material stays there. We move 30 million cubic meters per year just to get 90,000 ounces.
Right.
But all the material stays there, and what we do as our dredges move north is we level the ground and bring it back to production.
Yeah.
We put exactly in the same fashion, the alluvial bed underneath, then the barren part, and then the organic part. Sometimes we bring families and pay them a salary for 2 or 3 years until the land is productive, and then give them the property of the land.
Okay.
Sometimes we do it ourselves and do like reforestation or another action, so the environment returns to more or less what it was before we came.
Okay. That's great. It's important to be able to say that, because people worry about mining.
Yeah.
Sometimes. Nicaragua, I like these. Do they call them garimpos down there, or the artisanal miners? Artisanal
yes.
miners, right? Okay. They can be quite useful.
Yeah.
Because they can find gold for you sometimes. Do you? But you kind of harness them in terms of they have a cooperative. They kind of sell you the gold, and you pay them at whatever market rate. How much are they bringing in? Because that must be, 140,000 ounces coming from this, yeah?
In terms of mineral, 50% of the mineral we process is artisanal, and 50% is our own mineral.
Right.
Why does it make sense for them to sell it to us?
Yeah.
The first thing that you have to say is that it's legal to operate in our land package in Nicaragua, so they can go somewhere else with the mineral. Okay. Why don't they do it?
Yeah.
Because the alternative is an artisanal mill. The recoveries in our artisanal mill are going to be 60%. They will have to split with them, so they will get about 30% of the gold content of their mineral. Mm-hmm. With us, our recoveries are 90%, so we can afford to give them between 40 and 43%
right.
of the gold content.
Right.
So it's a win-win situation.
So what are your margins on this? How much do you make, given that they've done the hard work finding it?
Then we have to do all the metallurgy.
Right.
So we have to process the mineral. Our margin in our EBITDA margin in Nicaragua is about 35%. Our EBITDA margin in Colombia is about 48%. So both operations are really profitable. We generate a sound amount of cash. And that was part of the problem, and is part of the problem for us. Because when we were ready to list the company in Toronto, we don't need any money. We didn't need any money. And it didn't make sense to raise $70 million in Toronto and then decree at $25 or $30 million in dividend. The market was going to go like, what are you doing?
Yeah.
So we ended up raising too little, only 24 million. And what we're doing now is trying to move shares from Colombia to Toronto.
Okay.
And slowly we've been able to do that. Now we have something like 100 million shares in Toronto and 200 in Colombia. But we want to do more of that, or increase liquidity by finding a potential merger or acquisition in which you can use stock.
Right. So in terms of the free cash flow that you have, I know you're doing dividends, etc. Because you talked about 1,100 in terms of the ASIC there. And what do you, given it's essentially unusual, the alluvial is, not necessarily completely conventional these days. Using the artisanal to kind of as 50% of your feed, as it were, into the plants is not exactly conventional either. Mm-hmm. So how do you measure the total costs if you're giving away 43% to the artisanals?
Okay, so how do we put this in a very simple way? Our own mining in Nicaragua has better EBITDA, but we have to invest more. It has more capex.
Yeah.
The artisanal mining is only OPEX. All of it is OPEX. At the end, it levels up, and our margin is about 30-35% from both. In Colombia, what we need to invest mostly is in compensation, because we operate in an area that is it has a lot of biodiversity. So we have to, for example, when we reach an area, we have to identify the plants and the animals that are there, move somewhere else, keep them for a while, and then release them after we move north. So Colombia, from the operational point of view, is very efficient, but we have to do much more compensation and mitigation.
Right, and the conversation goes to where the state or locals?
Locals,
okay. And when this kind of, I'm sort of interesting, it's just a slow-moving dredging exercise.
It is.
Going forward. So how far do you move over, say, a year?
It's not that long. It can be something like 3 or 4 kilometers.
Yeah.
To give you like a rough number, we started in a town called Zaragoza, and 100 years later, we are 2 towns north from that, El Bagre, and now we're close to Nechi. And currently, we have to move our people something like 50 kilometers to get from where they live to the operation. But we are slowly moving people to Nechi, because now Nechi is closest to our operation. It's an interesting thing. It's like like a snail moving slowly.
Yeah, that's what in my head. That's what I'm saying.
And we, at the same time, we're closing the mine. So most of the package of Mineros has already been closed. The mine has already been closed, and it creates challenges in itself, because we can't afford to go back. So we need to mine the rich areas, but also the areas that are not so rich. So we're constantly finding ways to do that. Now we have a formalization program that allows us to dredge areas that were not profitable for us. We do it with local people that were previously working informally, and now we have 400 people working with us inside our pond in a formal way.
Right. If I'm just conscious of time, because I know it's been a long week for all of us, and you can places to be, but I just wanted to get the story, because it's a relatively new story to us. Where you go, I feel like this is a dividend story. It's a good dividend, very good dividend. It's better than going to a royalty company and getting a decent dividend here. So that's fantastic. But most companies have to tell a growth story too, in terms of what's the upside of this thing.
Okay.
So, in Colombia, I see this slow-moving snail procession thing. It's very effective, good margins. In Nicaragua, you've got this kind of hybrid system set up, and that's very effective too. But can you take those models and do that elsewhere? Do you want to, or is this because of the bit that's back of my mind? I'm wondering about, why go public at all? Why go public? What do you want to do? What's the access to those markets that you think you can utilize?
Okay, so I'll answer first the last question. Which we were at the Colombian Stock Exchange, and it's a very dry market, and our price suffered. So there is a lot of value locked there for our shareholders. We wanted to unlock that value. That was the reason to come to Toronto. And in order to complete that, we also need to get a re-rate in Toronto. And in order to get a re-rate in Toronto, we think we need to grow, be between 400 and 500,000 ounces of gold, and we need to have more liquidity, and we have to build like a story and get trust from investors. So definitely we want to grow. We have a project in Nicaragua that will bring us to around 300 ounces, and the rest will have to be inorganic. What are we looking for? To be honest, a tier 1 jurisdiction. Hopefully in this time zone, we're looking at North America, Canada, not Mexico right now, not Peru right now. And we're interested in buying projects or companies that are in production or close to production that will incorporate 100 or 150,000 ounces additional to our current production and our potential growth. So that's the upside of Mineros. For Colombia, we think Colombia is going to be the cash cow, to be honest. In Nicaragua, we have room to grow because we have 150,000 hectares of land package, and we only started to explore that. So there's plenty of room for growth. We want to do it carefully, because we have to care for our shareholders. We have shareholders that have been with us for 50 years. We don't want to dilute them too fast, and we don't want to stop caring for them.
Yeah.
So in many ways, we're a strange company because we're cautious. We're not in a hurry. We're paying dividend.
Yeah.
We have a dividend yield of 12%. So
Yeah.
our shareholders can afford to be patient.
I was drawn to this when I was made aware of it. I was drawn to it by the dividends. Okay, you're paying sort of coal company type dividends, right? Lots of companies paying 1%.
Yeah.
Lots of companies paying a lot less than that if they are indeed. They just want to say they're paying dividends, but not really meaningful anything. So 12% is exciting enough, and quite frankly, on its own, fine, no problem. If I look at what you've got going for you, as I say, the cash cow in Colombia, I get that. It's just a slow, steady annuity stream of very simple cash, not complex. Nicaragua, it is a country which I think most people fear doing business in or fear investing into because they don't understand it, and it's complicated. For you guys, you seem to be absolutely comfortable there, and perhaps that's your USP. That's the advantage that you have for sure. And let's not least forget, 230,000 ounces is already good.
Yeah, it is.
Right. There's not too many people at those sorts of levels, not with those sorts of margins anyway. So I guess the question I'm thinking is like M&A, it's usually expensive if it's in a competitive environment. So when you talk about Mexico or you talk about some of those jurisdictions perhaps are better known, it could be expensive. And maybe is it the best use of capital, or should you stick to what you're good at?
I think there is a balance between cost and risk.
Yeah.
I think mining companies are used to work in complicated jurisdictions.
Yeah.
Not only in America, also in Africa and all over the world. But I think the best way to deal with risk is to be diversified.
Yeah.
Your bet is very simple. You bet that things are not going to be complicated at the same time in the 3 or 4 regions where you are.
Yeah.
We used to think that Chile was perfect, and Chile became complicated out of the blue. So no country is free from the risk of like getting complicated without maybe without reason or with reason. So definitely we want to have a third geography.
Okay.
Of course, we're open to other countries, but if we get to choose, where there are regions in Canada that are really attractive, like Newfoundland, Nova Scotia, Quebec.
Yeah.
Give us the chance to work in a tier 1 jurisdiction. I mean, we don't have to stay. We already have 2. We don't have to stay out of tier 1 jurisdiction.
Good man. It's really nice to hear your story. I really like it. I encourage people to come and have a look at what information is out there on the website and so forth, and stay in touch with us.
Thank you very much.
Thank you.
Thank you for
Cheers.
having me.